Hello and welcome to the Milo Minute. Today we're going to talk about RMDs. Now, what is an RMD? An RMD stands for Required Minimum Distribution. Now, do you have to do it? Absolutely. It's in the name, required. Required Minimum Distribution refers to your qualified accounts, basically your IRAs, your 401ks, your 403bs, essentially all of the accounts that you've accumulated throughout your lifetime that you've never paid tax on. Well, guess what? You've hit a magical age where the IRS says, guess what? You've had enough fun. Now it's our turn. So now you got to start taking money out of that account to satisfy the required minimum distribution. Now, if you're taking money out to live off of, chances are you might be satisfying your required minimum distribution. But for a lot of people that I work with, they never touch that money. And so they're forced to take it out. You can take it out quarterly, monthly, semi-annually, annually, however you want to do it. Basically, there's just a set number that you have to take out of those accounts. Now, the way you figure out how much money that you have to take out to satisfy that requirement is based on a table created by the IRS. So here's how it works. You have to take the ending balance of the year prior, so December 31st of the year prior, whatever that balance is. In your first year, you would then divide by 26.5. That's the factor that they use to figure that out. Now here's the issue that I find. What if your account balance at the end of last year was much greater than it is today? Well, then the RMD becomes very punitive because not only are you having to take out the requirement, but they're also going to be using a ghost number that no longer exists. And let me explain what I mean by that. Let's say you had $1 million in your IRA retirement account at the end of the year prior, and then the market dips 20%, which it can do. Well, now you only have $800,000 in that account. 200,000 of it vanished. Well, guess what? It's going to be even more painful because they're going to use that factor on $1 million, not the 800,000 you have. So I did some numbering, and let's just figure that out. So the RMD on $1 million is $37,735. Now, most people would be thinking, well, hey, I only have 800,000, so what would the RMD be there? 30,188. So that's a difference of $7,735 right off the bat. Plus, you lost $200,000 in the market. So now you're down $207,735 in 1 year. How do you come back from that? Well, some people don't. So that's why you need to be very careful with your IRA in retirement. The math is always different in retirement. I preach that to every single person that I meet with. The math is simply different in retirement. There's ways to protect your IRA from those types of situations. There's ways to be tax smart in your planning as well. And we'd be happy to discuss it with you here at HPY Financial. You can always give us a call at 623-887-9322. You can also check us out on the web at hpyretirement.com. Have a great day.